Hello, this is a teaching on bank reconciliation. When we talk about bank reconciliation, we're simply just looking out to assess, is it the case that I have picked up everything that has happened in the real bank, everything that we've paid for and everything that we have received in the in-house cash book that is being maintained. So bank reconciliation is the process of checking the bank statement against the cash book and ensuring that all monetary transactions are recorded correctly. Cash book is maintained by the organization in the accounts department, and the bank statement is maintained by the bank and sent to the organization. Or, of course, you can download it online or you can get it in the post or however you access your bank statements from the real bank. You then want to make sure that what you are accounting for and the records that you are keeping and maintaining in your organization are correct and tallying with what the banks have. Hence, you will find that you are checking your bank statement against your cash book that you have maintained in the organization and try to identify, are there any anomalies that you need to adjust your cash book for? Or are there unpresented checks and outstanding lodgements that you do not need to adjust your cash book for? So you may find that you have written out a check, you've entered that in your cash book, that is fine, money going out, and you've sent it to the supplier, you're waiting for them to cash the check. But you will find that when you're waiting for them to cash the check, they will not cash it straight away. But I have entered it in my cash book straight away, which is fine and correct. But you will then find maybe this month entirely, they will not even send the check to the bank. That means that when you come to do your bank reconciliation, you will have that item in your cash book, but you will not see it in the bank statement, leaving us with an unpresented check that has to be put in the bank reconciliation statement. You would not adjust your cash book for that because you've actually paid that money. You're just waiting for them to cash their check. That is a timing difference issue. So such transaction will go into your bank reconciliation statement. Then you also have outstanding lodgements. Outstanding lodgements is a case where someone gives you a check or a payment and you have to go and put it into the bank. And at the time you receive the payment, you will enter it in your cash book there and then. But maybe you've sent the check in the post to the bank, or you're going to go to the bank tomorrow, next week, later. That will mean that you've received the money, it's in your hands-ish in a form, but you have not paid it into the bank. The bank itself has not accounted for that transaction. So you will find that it's a matter of time and we expect the banks to account for that transaction. So it's right for it to be your cash book. It's just that it has not gone to the bank. Again, it's a matter of time and then you would have it appearing in the bank statement. So we will put such transaction in the bank reconciliation statement. We will not adjust the cash book. For other transactions, we will expect you to adjust the cash book. Let's look at an exercise. In there, they've given me a bank statement and I've been given a cash book. So you would need to tally the items in the bank statement with the items in the cash book to try to see what do I have both ways and what do I not have both ways. In addition to that as well, you have to check your opening balance to see, do I have the same opening balance? Of course, you will see that if you had any issues from last month in regards to your timing difference matters, outstanding lodgements and unpresented checks, you will also find that it may be appearing in the bank this month, but it has appeared in my own cash book last month. So I will not update the cash book again this next month. I would rather ignore such transactions because I have accounted for them in the cash book already, and such items will cause my opening balance to be different. They appeared in the cash book last month, but they're now appearing in your own bank statement the following month. Now that we come into the following month, you will then find that such items will not be accounted for in my cash book again. Why? Because I've accounted for it in the last month's cash book. You have the opening balance to reconcile. Then you have to identify all the transactions in and out, and then of course identify what you will need to enter into the cash book that has appeared in the bank statement but not in the cash book, enter those, and then you can close your cash book and prepare your bank reconciliation statement, and then you are done and dusted. Hooray! I usually like to start with the opening balance. You don't always have to start with that. Some people will start with something else, but I usually like to identify and reconcile the opening balance first, and then move on to the transactions in the bank and the cash book, and then update my cash book, then prepare the bank reconciliation statement. I'll retain that pattern here. My opening balance here tells me on the debit side 761. That means I have money in my hands or in the bank. But the real bank is telling me that I am £1,135 debit. That is to say, I don't have money in the bank. You are overdrawn from the bank. So I need to tally what could be causing that difference. And if I'm looking at the difference in the two, I would need to add the two figures together. But let's leave that aside. I have check number 00026 as the first check I wrote is August. That means as well that if there is any check that is before number 26, I wrote it last month and I issued it last month, and then if it's appearing in my bank statement now, it means that the person has only just cashed it. It is an unpresented check. So I always start with that. I have 26. I look through my list there carefully, and I want to see if there's any check number that is before 26, and I have one. So that item will be an outstanding lodgement for me. I have my bank opening balance as 1135. 1135, if I make another payment, it will take me further into overdraft. So I will add 832. And that will give me 1967. Of course, I've not got to the destination point because I'm still even further overdrawn at this point. And I'm trying to get myself to £761 money in your hands. So if I wanted to try to identify what could be causing that difference, I need to add that 1967 to 761, and that will give me 2728. And that has to be money coming into the bank. That means your overdrawn money comes into the bank, then you can then go into the black again, because at the moment you're in the red. You want to get into the black, money has to come into your hands. And if money comes into my hands, it has to come to the tune of £2,728 to bring me back to a debit position of 761. And I look through my list and I can see one. Money coming in, paid in. So those two items will be affecting my opening balance. So I have them 761 now. Now do bear in mind that we have put in there 1967. Maybe I should put that as a minus if it will help to a certain clarity, because we're going across the number line. Okay, so we're trying to go from the red into the black, or from the negative into the positive. So the two figures, I'm looking for the difference in the figures. So from 1967 to 2728 will literally leave me with 761, and that brings me down into the black now. So my opening balance has been reconciled. I then want to pick up on what transactions appear in the two documents. Let's start with the money coming in. 1305, and I see it there. I want to highlight the two. 3940 from Tama Services, the same company, Tama Services. I don't have any of the other transactions, and I have 1020, which is coming in, but I do not have it in the bank I have it in the bank, but I don't have it in the cash book, so I'm going to update my cash book with that. So I've just thrown in that Jones and Co. into my cash book because it has come into the bank but it's not in my cash book. So I've updated my cash book and I'm done with that side. But you will see that I have those two transactions which I have not done anything with them yet. So those two will need to be updated into my bank reconciliation statements. Let's lighten the color a little. I go on to the credit side. I want to do the same thing. I have that, both documents. 1307, check 29. I have that in both documents. Check 27, 840. Check 27, 840. I have that as well. Check 31. I have that both documents. Then I can see that I do not have the standing order and the bank interest. Those two transactions, I need to enter them into the cash book. And I'm entering them on the credit side of the cash book because this is money going out. So they go into the credit side of the cash book. Your money is reducing. I put in the date. And that was a payment to BT and for bank interest. And I've entered all the transactions that I need to enter into the cash book. I now can close my cash book. And of course, in closing the cash book, you will be required to get the total of your debit and get the total of your credit, write them down, and identify which side is the lower side, which side is higher, which side is lower. The lower side will carry the difference so that the two sides can tally up. And the total there is 12016. The total there is less than 12016. So what I want to do is drop in 12016 straight away in there as my total. And I will get the difference as my balance CD. So you're literally adding the two sides and making sure that the two sides add up to exactly the same total. And the difference in there is 1934. So I throw in 1934, which is my balance CD. If I have closed the account with 12016 closing balance 1934, I will then as well be able to open the account in the next accounting period with my opening balance, which will be on the 1st of September. The next accounting period, and we open with balance BD or BF. You close with balance CD, you open with balance BD. And I'm done and dusted with the cash book. The next thing we then have to do is to ensure that we then update the bank reconciliation statement. And I'm going to update the bank reconciliation statement with the current outstanding lodgements and unpresented checks that I may have now. which at the moment they are highlighted in red. So those are the outstanding lodgements, money coming in that hasn't been shown on the bank account, and money going out, unpresented checks that haven't again shown in the bank account or the real bank account on the bank statement. So I want to update my bank reconciliation statement. So I will just pick up the outstanding lodgements and then my opening balance from the bank statement, the closing balance. So I'm taking in Martin and Martin. These are coming from the cash book, and I'm taking in Oster Computers 3144. And those are the only two that I have. Then I'm going to pick up my bank statement closing balance as of 31st of August. It says that clearly to me as of 31st of August, so I need the balance from the bank statement, which is my closing balance in this case. So I've taken that as well, and it's going into my bank reconciliation statement. Then I want to also take the unpresented checks. So we pick up the closing balance from the bank statement, we pick up the outstanding lodgements, we pick up the unpresented checks, and those will go into the bank reconciliation statement, and I've highlighted them in red just for conspicuousness. So I'm just copying the names through. And I'm training the figures. And we are almost done. So I can pick up the addition of those two, which are outstanding lodgements. I trade in there. I pick up the addition of these three. I trade in here. You will see it has clearly told me you add the total of this to 807, and I will minus 3863, and that should give me 1934. And where that gives me a closing balance of 1934, it says balance per cash book. So the balance on the cash book after updating and closing the cash book should be the same as I have down there, 1934. That is your confirmation that your bank reconciliation is done and dusted. If it was not the same, it tells you that there is an error in there which you need to fix. So it then means that you have to go back on yourself to try to identify where is the mistake or the error coming from. I hope this has been useful. The rest of it is study ongoing, practice ongoing, knowledge is important. And then of course, please remember, like us, follow us on all the social media platforms. And if you found this video useful, don't forget to hit the subscribe button. Adios.